You have an S corporation, it's year end, you may have some planning to do. And for a lot of you, you don't have a proactive tax person who's doing this for you. Let me give you an important example that may save you tens of thousands of dollars. Qualified business income, the QBI deduction. This is a very important, it's boring sounding, it's not boring when you look at what it does. The QBI deduction is 20% of your net business income. So if your business makes $200,000 net income after all expenses, the QBI deduction is $40,000. That's probably right around $10,000 to $12,000 in tax savings for you. It's a very important thing. There are details involved. Specifically, if you make single $200,000 or more in 2025, if you're married filing jointly and you think you're going to make $400,000 or more as taxable income for 2025, then you have extra steps you need to take to preserve QBI. Because when you make more than those numbers, 200,000 single, 400,000 married filing jointly, your QBI deduction is limited. You will get less than 20% of your business income as a tax deduction unless you take steps now to fix that. So what do you need to do at year end? If you have an S-corp, you're in those high brackets, how can you maximize your QBI deduction? You increase the salary you pay yourself from the S-corporation. I know it doesn't make sense. Congress did it. I'm just using it to help you. The way to maximize your QBI deduction, if you're in these high income brackets, is to pay yourself more salary from your S-corporation. But this has to be done by year end. I see so many returns in 2026 from 25 where people miss this detail and they say, well, how can you fix it? I can't. This has to be done by December 31st. I don't want you to bring me a tragically flawed, irreparable return in 2026. You have to do this before year end. Specifically, what do? Ask your accountant, or heck, ask ChatGPT. I'm going to make this much for the year, taxable income total on my 1040. I have this much business income. Do I need to pay more salary? If so, how much more salary do I have to pay to maximize my QBI deduction? Is it worth it? Paying more salary costs me more Social Security tax, but it increases my QBI deduction. What's the math? For example, I make $300,000. I file single, so I'm over the $200,000 limit. ChatGPT, I'm going to make $300,000 taxable income. It's all from my business. I expect to receive a $60,000 QBI deduction, 20% of $300,000. I want to make sure I'm actually getting the full QBI deduction at 20%. Based on my present salary, am I going to get the full QBI deduction? If not, how much more, chat, how much more do I have to pay? And then chat, please do the math. Tell me, by paying extra salary, how much more Social Security tax am I going to pay? But by paying the extra salary, how much more QBI deduction am I going to get? That difference tells you whether or not it's worth it. Let chat know also how much depreciable property base you have. Now, that's getting a little more complicated. You're able to maximize your QBI deduction by having property inside the business. That's great, for example, for landlords. You're also able to maximize your QBI deduction by paying extra salary. So I'm simplifying. If you have a good accountant, they should have already spoken to you. If you have a capable but not proactive accountant, get a hold of them and ask them, based on all the numbers in your return software, based on this projected income for 2025, do I need to pay more salary out of my S corporation to maximize this deduction? And is it worth it? What's the cost of the extra salary? What's the benefit from the QBI deduction? This is an important year-end item. Too many people miss it. You need to be on top of it if your accountant isn't.